So this model is like, I don't know, the highest probability entry model that you can find. Okay, the highest structure, liquidity and entry model that you can find anywhere. In fact, is the structure, liquidity and entry major model. All right, it involves liquidity, that's inducement, the fair value gap, that's the everything now, and order block, that's the OB. So these are the three key things that it involves. Why we included structure is because it is a continuation model. Okay, just like I explained to you guys when I was answering the BTC, why I took the BTC sell, you can see that I used it as a continuation in the second trade. Okay, so you can have, for example, a higher time frame trade. Okay, and then you now have maybe a higher time frame target. You have it somewhere. So price can form this model as one of the entry, okay, before taking out the target. So it's basically a continuation entry model, please. You can use it for reversal, but it is a lower probability with reversal. It is a higher probability with continuation because you already know where price is going. Price is heading somewhere. All right, that's why we call it continuation entry model. So this is the model. So first price form a leg and then the inducement is formed. So we have our order block. So this is our order block here. I've explained my kind of order block for you guys. And then these are our inducements because it's close to POI, which is the order block, and there is a break of structure. Those are the things that makes up an inducement. It is a liquidity that is close to a POI and it broke structure. And then we have our fair value gap very close to our order block. It's so important. It gives it a higher probability. Now, most times the inducement is formed by the fair value gap. Okay, so price will first retrace to the fair value gap, form the inducement, that is to break structure. Then before price will come back to take the remaining fair value gap out to tap into the order block, and you will have your impulsive move. Anytime I see this kind of setup, I always prepare myself, prepare my risk. There is a kind of risk that I take when I'm taking this kind of setup that I don't take with other setups. It's just like a personal decision. Okay, whenever I'm trading this kind of setup, I'm always so relaxed. Not because it cannot fail, but because if I see it again, the probability of it playing out, as long as there is a target in view, there's a higher time frame target in view that price is yet to take out. As long as there is a higher time frame target in view, I'm so relaxed. All right, I'll teach you guys target narrative so that people will not say, how do we know target? How do we know target? Please. All right. For example, this kind of trade that happened, I've been trying to target, I've been trying to target gold to take out this liquidity for like, I think like 2 weeks now. Gold is still playing. But we'll see from next week what gold is going to do. So I had this POI here. Okay, price will likely sell from here. Stuff like that. But then there's a setup that looked like this model that I'm just teaching you guys. I think it's clearer in. Is it clearer in 30 minutes now? The model is. Okay. So this model is similar to what I'm teaching you guys right now. The price created the inducement and then use the order block to buy. Okay. Though in 30 minutes the fair value gap is not obvious. I think it is obvious in 1 hour or in, okay, it's 1 hour. And then the other block is not now obvious in. So I should not limit yourself to one time frame. In 30 minutes, the other block is valid, but in 1 hour, it doesn't look like an other block. All right. The reason why you should be flexible with time frames is so that you can compare what you see. So as long as I saw, and then in 4 hours, it was like a fair value gap. So everything was just in place. We have our fair value gap here. So don't say in 1 hour or in whatever, in 15 minutes is not showing this, it's not showing that. Market will only leave you. I will teach time frames so that you can understand it better. Before you will say now, Lex, you've not taught us time frame. So this kind of setup is like that entry model, which there is an obvious inducement. There is why didn't it tap on the GUC said why did it tap on the fair value gap below it? If you look at the fair value gap below, in where the other block is obvious, you will see that price have tapped into this fair value gap before. Look at it. The fair value gap was formed and price tapped into it. And this is the time frame that the other block was obvious. Why? Because this is where price cleared liquidity. This is where there is a candle clearing liquidity right here. You can see how price tapped into this fair value gap. So even if price was going to come back to this fair value gap is likely going to fail. So that's why price protected it. Okay. If price have not tapped into the fair value gap before, it would have been a different case. In fact, I don't think I would have taken the trade. It is the tapping of the fair value gap that made this POI valid because the order have been transferred. Some orders or all the orders or whichever size of orders have been transferred by this tap of the fair value gap. All right. And then price came in and did what it has to do and we had our impulsive move. Whenever this kind of setup shows up, it doesn't show up all the time. It can just show up only once. It can show up only once on a trend. But whenever it shows, it is always an impulsive move. Let's check where we can see such setup again. GUC, I hope I answered the question. Mr. Akban, you did not attend my other blog class and did not bother to watch the video. It's okay. I will not foresee anybody. So we have this is like a continuation entry model. Please, you guys should always watch the video I sent to the the video of the class. I know that everybody is busy. If you miss a class, you watch the video. That's why it's there. What do you mean? How is that another block? And you attended my other block class? It's not possible that you're asking how is that another block when you attended my other block class. I mean my POI class, sorry. So this is similar to the setup. What do we have? We have our point of interest. This point of interest is a structure. Okay. I told you guys your POI can be like a structure and it can be like a candle. It can be just a candle. So I don't need to explain this now. Okay, price tapped into this structure and we have our fair value gap below it. Most importantly, we have our inducement. It's so important that there's a break. Okay, so you can see that the liquidity is close to our POI. We have our fair value gap right here. Okay, like I told you, sometimes the inducement is formed by the fair value gap. You can see how price first came to the fair value gap, broke the low before it went back to the other block. You can see that. But before this setup came, price was already selling. No, price was already selling. You can see how price is protecting each low. Engineer liquidity here protected this. Protecting each high. Okay, protected this high, could not take it out. Engineered this liquidity, came all the way down, and then price came again, took out liquidity, still could not break another high. It was just basically a range. Okay, it was basically a range, and price had to do something. Price had to face one side. Okay, so if you are taking this kind of trade, your target should not be let price come and take out this whole low, because price is still ranging. Okay, price is still ranging. Your first target should be the low that caused this move. So your target should be here. Okay, if you want to say, okay, you've gained enough experience to want to extend your target, that's when you can bring it to this low, because the way market is protecting each high is the same way market is protecting each low. It can decide to come take out this low and then all the way up, and it can do the opposite. All right, so this is this 30-minute time frame. There's a move that I caught, I think, last year with this same entry model. This is a range, but the one that I used, I really banked on that setup that day, hoping that it doesn't fail. because the way the setup was, I had a higher time frame target, which was here. All right, I was expecting that price would come all the way here. All right, I think this is when I was having my, I think 3 days boot camp for free with some of my followers on from my Twitter. So we had a discussion. I can't explain why I took this trade now. It's going to take a while. But I just wanted to see the model. Okay. I think I've even explained something here before. Our price was breaking each of the highs after we raided this range out. And price started breaking each highs. Started taking highs and highs and highs and highs. I think this is the third or fourth high. I think this high happened during Asian session. I was awake. I took this buy from engineer liquidity. In 15 minutes, you can see our fair value gap. Price bought from there, though it's still wicked down a bit. So now, this was now my POI. Okay. Now some of you may say, why did I not still pick this POI? Price is in an aggressive uptrend. Okay. And this is the second demand before this high was. That's the last low before this high was broken. Now, this high, this POI is another block, a complete one, because an obvious liquidity was taken. After price took out this high, I was still on my buy. When I started seeing this sell reaction, the sellers became so aggressive, I had to close it. I have not even counted my highs that time when I was still on this trade. So I had to go back and count my highs and be like, okay, price have taken 3 or more already. So it's possible that price is coming to take out this low. And truly, price did not waste time. Within few hours, price came and tapped here again. Now, my SL was now close to this point. I banked on it so okay, since this POI was not even mitigated up to half when price tapped in a bit here, it's possible that it's going to play out. All right, and I have a higher time frame target. That price will likely go to. So I took the setup and I got lucky. We have our fair value gap right there. So you can see the setup is a continuation entry. Okay, it's a continuation entry that I used here. Price was already buying, and I just price formed the setup here, and price was going up. It is a continuation entry. Please use it as a continuation. If you are using it as a reversal, know that it is high, it is low probability. Okay, there's a reason why it is called continuation entry. It is the same thing that formed here, even though here was a range. Price was ranging really mad. Price was like, I think this is 2 weeks. This is like 2 weeks price action. Price still managed to pull it off. Price still managed to pull it off here. We have a tiny fair value gap. So you can see that it is not the model that started the range. It was inside that model was formed. That is how it is. And then price targeted this high. We have our inducement. Price will most likely not use it to start any trend or any range. It is when the trend or the range have started, that is when it will now come in for an impulsive move. Whenever you see that kind of model, you can see how the move, the reaction, and how price took out the TP. It is always for impulsive move. Price don't just form it anyhow. Here, price engineer liquidity. We didn't use the model. Here you can see the model that I taught you guys last week. Price used it here. Our loan structure and unmitigated structure, stuff like that. Here, price used it to create another high. When I think, which news was this? NFP. Yeah, I was on this buy when NFP happened. Price used the model. A lot of people caught this buy. A lot of people caught this buy. Fair value gap, your order block, and it is obvious. The liquidity that was cleared is obvious in 15 minutes. And our inducement, of course, and all the way up, tapped in and aggressively. So price will likely not use it to start a trend. It is always when price have started the trend. I think price used the fair value gap here, not the other block. The other block should be from here. Use the fair value gap for continuation. That's 30-minute fair value gap plus inducement. Okay. I think there is another place. There are places that have used this model before, like even in 4 hours, price used it in February. So now, most times when price wants to use, what did I click now? Most times, price must have broken 2 or 3 structures before it even used this model. When it uses it for, like, after the 3rd break, and it will now come and use that following demand after the 3rd break as the inducement. I always like it when it happens like that, because the reaction will be so impulsive, especially when there is a higher time frame target. This case, it was a higher time frame target. All right, everybody was looking at this high, yeah. So you can see that the target was not really taken yet. And structurally, I've taught you guys this in structure before. I've explained something here before. All right. So what did price do? Use there as inducement. and fair value gap. The setup is complete and price reacted aggressively. Now, why did I assume here to be inducement before it even happened? Because this was the third break. If you count from below, this was the third break. All right, I just use my experience and my structure knowledge. So when price came there, I had to take action. All right. So whenever it's like this, price always make an impulsive move with this model. It always make an impulsive move. I've used it in October. Is it October? Be August. I can't even remember any. Okay, so it's October now. Here it happened in October. The model is more visible in 30 minutes or 1 hour. This model, this sell was a disaster that day. For me, I was seeing something else. Why people were like shouting, go did this, go did that. I was seeing something else. I was seeing my model. I just checked 30 minutes and 1 hour. I saw the model and I knew that the buy will likely continue. Not because I really have any target for where price gold is going to peak or something. But because I saw the model and I just felt like the buy will continue. And there's something that I will tell you guys about gold. That's one of the things that I used last year to actually trade gold that worked pretty well. I've not actually paid attention to it this year, but I will still tell you guys anyways because that's why you are here. So this model, look at this. Price came all the way here. Now, like I told you guys, okay, I took this swing. When I took this swing buy here with the entry model, with engineer liquidity, sorry, I took this buy here with engineer liquidity and was expecting 2780. Okay, I was expecting 2780. You can see that my target was still far. All right, I was expecting price to come all the way here. Look at what happened now. So what happened? Price engineer liquidity and started going up. And when it finally got here, this kind of sell that happened, when it finally got here, price created this fair value gap here. And then when it tapped in, the aggressive sell made me to, I think I closed around here. I had to close my buy around here. When price retraced around here, I had to just close it because the sell was now becoming so aggressive. I think that's one of the best trading decisions that I've made so far. Closed it around the end. Few hours later, all the way, took my stop loss, everything out. And then because I was lucky to make that decision. I now have eyes to still see more things. I wish the price actually came from my SL. Maybe I would have not even seen this setup, honestly, because I would have probably not paid attention to charts that day again. That'll probably be the next day. So I checked this 30 minutes time frame. No, 15-minute time frame first. Wasn't really seeing it clearly, and then I went to 30 minutes. Always be flexible with your time frame. Okay, I saw the order block, very valid, and then the tiny fair value gap in between. So I just assumed that okay, price wants to use here as inducement for more buys. Price came, tapped in during New York. Then we started seeing some reaction. I had my buy until price took out this high. So it was now that price took this high. You will see the trade on my account, my X account. It was now that price took this model, price used this model that was now settled that okay, my target is going to really come. Since this model have been formed, the chances that this target will come is there. That's what I now say. So when price came to this target, I think what they call this guy on Twitter. Oh, I can't remember his name now. We had a short conversation on Twitter. What am I saying on gold and stuff like that? I told him my target have already hit, and I'm expecting that price will range for a while. I'll retrace because this particular zone, whenever gold gets there, there's always a reaction. I wasn't really expecting all this to happen, all this sell. I was just expecting something like a range and retracement, and we'll continue buying. Oh my god, I didn't know that something like this was coming, honestly. I think it was influenced by Trump winning the election. Yes, because Trump said he was going to sell some gold reserve of US to buy Bitcoin. So Bitcoin flew to all-time high and gold tanked. You can see how fundamentals are driving the market. So I think I've practically said enough tonight. So when you have probably you have something like you have somewhere that price is going to, maybe price is going to a target in 4 hours, and price is still around here, price is just moving on. Price can form this model and use it to get there. Okay, price can form this model. Now look at this. This model can be after the third break sef. This model can be after the third break. Okay, it's not compulsory that it will just be the first one. Now this is first break, second break, third break. It can be the price will now use here as inducement and come for this second demand before the impulsive move. All right, so here will now be like our inducement, which is the first demand after the third break, the following demand used as inducement. Okay, let's check EU for something. This buy that happened, I saw this buy last week, but me, I don't trade EU. I don't trade EU. So I told you guys, what did I tell you guys? That EU is still bullish till, thank God you guys were in that class. I think I even mentioned it twice. I mentioned it twice that until price take out the second demand, price is still very bullish. And I said this is the low of the second demand, right? And the other class I mentioned during engineering liquidity class, I mentioned the fair value gap here in 4 hours. The price is likely going to react, and I told you guys that you guys should wait for market open. How did market open? Market open with an aggressive buy, and till today market is still buying. All right, now but look at what happened here. It's not the structure that, it's not what I've said before that I want to repeat again. Look at what happened here. Price started breaking structures, right? Price started breaking structures. After the third break, what happened? Here became our inducement. All right. Now, there are two things that made price to take out this low as draw of liquidity, as whatever you want to call it. First, the second demand have already been mitigated. All right. So there's no order left there. Secondly, you can see, let me show you guys what I'm talking about so that it will not look like I just mentioned it and I didn't say anything. This other block have been tapped in. All right, this other block tapped in. The price tap into this other block. Yes. So you can see that the orders have been climbing and climbing and climbing. And here was, instead of here to react, here is now the following demand after the third break. You have to be practical about your trade. So you can see now that the order was not here to save price, and what the price do? Wicked below it. As I've told you guys that if the second demand have been mitigated, price is likely going to weak the second demand before it buys. Price wicked it because there was nothing here to be mitigated, number one. Secondly, there's a fair value gap below it. So there's no reason why that POI was going to hold because there's nothing there. And after that, what happened? Aggressive buy. So this kind of setup is always for aggressive moves. All right, it's always for aggressive move. You can say I just move aggressively. If I was to like stake like $1,000 on this trade now, even if you want to like stake maybe $500 on this move, you'd have, by the time price got here, you would have made up to like 2,000 or even 3. I don't know how EU, if it's good, I can easily relate to the amount. So you can see practically how structure played and how the model also came in. Be practical about your trade and your analysis. Take time to analyze in details, please. Okay? So that you not be like, should I take it or I should not take it? Should I take it or should I take it? Be sure that, okay, this is what I know. This is what I'm seeing. You understand? You hit the button. Whatever it's going to happen, let it happen. Provided you've traded what you know. Okay. So that is that for tonight's class. Our next class, I'll be traveling this week. I don't know where I'm going to is going to be. If the network is good, for sure we'll have our next class. Then our next slide is going to be question and answer, please. All the liquidity and entry models thing. You guys are going to ask your questions from the liquidity, from the entry models. So you guys can ask your questions so that we can do assignments after the question and answer session. So our next class will be question and answer. I'm hoping that when I get home, I'll be traveling to my hometown. I'm hoping that when I get there, there'll be network and we'll be able to have our question and answer session on Wednesday. Okay, so prepare your questions, whatever you want to ask. Please don't ask me questions that I've answered before. Please ask questions that others will and can learn from. Please. Thank you so much. Good night, everybody. I'll send the recording.